Chargepoint stock analysis. Okay guys, so here we are with another Chargepoint update. I got a really interesting video for you guys to check out this time around. I've been very bullish on Chargepoint for a while now on this channel, and we're going to talk a lot about several things that I really think are really important when it comes to Chargepoint. Okay guys, so they just recently posted their latest quarterly report. That's for the fiscal year ending in 2022. So it's a little different with their fiscal year, how things go. But I just read the CEO letter to shareholders from Pascal Romano. A lot of amazing things have taken place in this company. And probably you guys have seen how bad the kind of rise in gas prices is, okay? So gas prices and oil prices are through the roof. Several reasons, of course, the whole Russia-Ukraine situation, but also, just the fact that we're slowly transitioning, okay, away from relying on fossil fuels, and obviously in the kind of the end stages, as we start to head towards transition, you take a look at like a long-term view of how long we've been oil dependent as a society and as a planet. It would make sense that we would see a spike in oil prices during this inflationary time. So in this video, we're going to be talking about why I think Chargepoint is like the excellent hedge against rising gas prices and things like that, and of course the electrification of vehicles, and especially in westernized societies, and then of course in other societies as well moving forward. So if you guys enjoyed this video, please be sure to give me a thumbs up. So let's get right into it, guys. So to give you guys a quick kind of history on what's been happening with Chargepoint, I mentioned this company when it was the SPAT, going under the ticker symbol SBE. So that was a while ago, okay? So that was kind of as we were somewhat through the pandemic back in 2020. This stock, most SPATs started around 10 bucks, of course. This stock went to around as high as almost $50, okay? And then we had this was kind of in line with the whole SPAT bust. Stocks soared, to the moon, and then of course most of these SPATs crashed, and people that bought at the top are pretty much down as much as 80% or more. So now we're back down to pre-SPAT levels. But the good thing is that the company's been really pushing forward. So I'm going to kind of give you guys a quick overview on what's been going on. And when you take a look at that quarterly report, take a look at the letter to shareholders, and take a look at some bullish catalysts that I think are going to push Chargepoint much higher and well past the $50 range. And I really believe that this is going to be a $3,000 stock by the end of the decade. So if you guys don't believe me, I just think, kind of looking at the numbers and looking at how big electric vehicles are going to become, and the fact that, as we can see now, most of the biggest tech companies out there, like Amazon, Google, companies like Google, companies like Tesla before they did their stock split, many of these companies are splitting their stock simply because the price is so high. And I really believe that Chargepoint has the ability to really soar here. I'm looking at a 300x in the stock price. So we're going to talk about why I think this is going to happen. So let's get into it right now. So I'll give you guys a quick overview on exactly what Chargepoint is, okay? So obviously, you guys are probably, hence the name, it's about, has something to do with electric vehicle charging. So this company basically enables, consumers, businesses to charge their vehicles. So they have a very strong footprint, and they are one of the largest charging networks in the world, with strong leadership positions in North America and a growing presence in Europe. So as you can see here, Chargepoint has more than 4,000 commercial and fleet customers, delivering more than 87 million charging sessions to date. And of course, it talks about how the United States and Europe is expected to invest a ton of money into charging infrastructure. And of course, consumers all over the globe are going to be switching to electric vehicles. So let's just give you guys some very important stats. So if we take a look here at some of these numbers, we can see that Chargepoint is one of the biggest market shares in terms of the charging networks in North America. They have over 5,000 commercial and fleet customers. They've been around over 14 years, okay? So they've been in the business quite a few times and one of the early movers. And they have over 188,000 charging points across the United States and Europe. So that's pretty amazing. So this is a very big company in terms of the charging infrastructure. It's probably the most dominant EV charging stock out there. So now let's take a big look at some more of those numbers. Okay, so as you can see here, they've delivered over 123 million charges to date. They say a driver plugs into a Chargepoint network every second, and they've been able to avoid over 700 million kilograms of greenhouse gas emissions to date. So this company's really making the air cleaner and really, helping to preserve the planet. So if you guys are interested in a stock that kind of provides not just obviously financial returns, but also good karma and good humanitarian returns, I think Chargepoint is an excellent play. This is kind of one of the things that attracts me to companies like Tesla and Lucid as well. Taking, reducing greenhouse gas emissions, making the air cleaner, things like that. I think it's really, really, really a positive thing for the environment. So let's talk about a little bit about this business model, okay? So the business model is basically Chargepoint is an asset-light company. They sell charging infrastructure to businesses and allow them to basically offer charging to their employees. They sell obviously chargers to individuals who want to charge their EV at home or something like that. And then they also have charging stations all over North America and Europe where consumers or individuals with EVs can plug in their EV and charge. So this has been really, really, really strong point for this company. And this is one of the reasons why 76% of the Fortune 500 companies use Chargepoint. The CEO, he went to Harvard University. This company checks off a lot of boxes. So now let's go take a look at that letter to, let's take a look at the quarterly results, and we'll take a look at the letter to shareholders, and then we'll kind of wrap things up here with my future price prediction. So, if we take a look here at the latest quarterly latest quarterly results, we can see here that quarterly revenue increased 102% year over year. They achieved record growth with 67% quarterly revenue growth, over 188,000 active charging points under management, and $300 million in cash, and a projection of almost $500 million in charging revenue. So these are some excellent numbers, okay? Margins did decrease, okay? Obviously, there's a lot of issues going on with inflation and things like that, and I think a lot of companies across the board are having to squeeze, either raise their prices or having basically margin squeezes. This is due to supply chain issues. Inflation was up, of course. So the Fed raised rates, so hopefully they'll get a control of inflation. Net income, losses did increase a bit, but we see this with a lot of tech companies, okay? They're going to experience losses in the beginning. Same thing with Tesla. Tesla lost money for years, and then once they went profitable during the pandemic, everything changed in the stock 10x. So, most growth companies are going to spend money to grow, and then as they get bigger and bigger and bigger, they're able to raise their prices. Their margins are going to improve, due to economies of scale and things like that. And things usually do get better. So this is a growth push for Chargepoint. I want to see revenue, and I want to see more people using the charging network, more charging ports. That's really what we're looking for here. We're not necessarily looking for this company to make money right after they go public. I just think it doesn't seem realistic. We've seen this with many other tech companies. They're going to have losses until they start making a profit. So if we take a look here, the guidance is excellent. Of course, they expect to increase revenue again over 100%. And, everything's just lining up. So now I want to take a look at the shareholder letter. I think it points out a lot of excellent things about this company. It's pretty long. I'm going to link to it in the description below. I don't want to cover all of it in this video, but I just want to talk about some of the key points that I saw in this letter. So Pascal Romano, he wrote this. He said more than 200 electric vehicle models are on the road in North America and Europe. Record sales expected to continue for the foreseeable future. I am more excited about the future of electric mobility than ever. So that was interesting to me. And over 200 models, it seems like a lot, where penetration is very small. So he said the shift to e-mobility is happening now with only 1% market penetration of electric passenger vehicles in North America and 1.5% in Europe. We see decades of growth ahead. So that's impressive as well, okay? We are seeing companies like Tesla, stock soar. yet the number of electric vehicles on the road is just 1%. So there's so much growth for the whole EV industry. That's companies like Tesla, Lucid, and ChargePoint, of course. We're in the early stages. If I were to compare this to the early stages, it kind of reminds me of if we were to think of something like Bitcoin or crypto, how this is the early stages. A lot of people don't have electric vehicles, and now people are feeling the pinch at the gas pump. So this is the next transition, okay? Just like crypto provided people with a savings account, especially Bitcoin, people are struggling to save money. They kept, spending. They kept getting their paycheck and then spending everything. They found Bitcoin. Bitcoin allowed them to save money responsibly. I think that ChargePoint is going to do the same thing. It's going to allow people to save money on gas and charge their vehicles responsibly. So we can see here, there have been over 20 new models of EV passenger and fleet vehicles in 2021 alone, and EV sales grew 93% in the United States, up in Europe 63%. So it says Bloomberg predicts that passenger EV sales will exceed 14 million by 2025, an increase of more than 100%. So as he says, ChargePoint is the index for electrification of mobility. They do a lot of things, like I mentioned earlier. They sell many different aspects of their business model, and their business model is very asset light. So they're not spending a lot of capital on things like factories and hardware and stuff like that. They're basically selling to commercial customers and things like that, and keeping the business model light. This is what a lot of companies like Apple do. Apple's very asset light, okay? They outsource all of their production to other countries, and they just focus on innovation and technology, and then they have other people actually do most of the manual work. So this is exactly what ChargePoint is doing. They allow customers to use charges as employee benefit or for customer attraction and retention. They sell annual subscription license to keep a charger on the ChargePoint network, so that generates a lot of recurring revenue. And this allows businesses to attract people, okay? Charging is going to attract people. When people have electric vehicles, they're going to be attracted to places that allow them to charge them. It saves money and it reduces their expenses. So this is a great way to attract good employees. And then they've done lots of different things. They have different level of chargers. They have level 1, level 2, level 3 chargers. Level 3 is the fast charger. They have a very diversified network, and they're able to basically make money off of commercial, fleet, and residential customers. So very diversified. The commercial segment, as I mentioned earlier, workplaces, retail locations, parking operators to basically charge their cars. Their fleet, like I mentioned, they have charging stations all over the North America and Europe that allows people to come in, charge, and they have a nice app that you can actually download in the Play Store, or the Apple Store, and use the app to charge. And you can link up your car, charge your car, and pay for everything on the app. And then, of course, residential customers, they're able to charge their vehicles at home with about up to 37 miles of range per hour. So these customers can hook in their EV when they're sleeping, and then they wake up and the car is charged. So this is one of the things that I think people don't understand about EV charging companies. Right now, to fuel your car, you have to go out of your way, go to the gas station. EV changes the game. It allows you to fuel charge your car passively, which saves a lot of time. You don't have to go, head over to a gas station, wait, pump your gas and things like that. It makes charging something that you can do anywhere. You can do it at home when you're sleeping. You can do it at work. You can do it at the mall. You'll be able to do it anywhere. And I think that'll open up a lot of productivity. So right now, the company is expanding into Europe. They're also planning to expand their fleet as well, and they have some nice partnerships. They have a partnership with Polestar. They have a partnership with Mercedes-Benz, okay, Apple CarPlay, and basically even the National Association of Truck Stop Operators. So 1,400 employees, really interesting company that I really like. And it just looks like things are just completely going in the right direction. Since their inception, they've done over 3.6 billion electric miles of charging. And the drivers that, like I mentioned earlier, has avoided over 145 million gallons of gasoline. So really interesting company that seems like it's just really checking off all the boxes. So now, after I'm going to link to this in the description below if you guys want to check this out. Really interesting letter to shareholders, very well done. And it's the first one by Pascal Romano. So let's take a look at some of those price predictions that I have for Charge. All right, folks. So now I was mentioned earlier my $3,000 price target. Why did I have it at $3,000? Well, the simple fact is that Chargepoint has been growing and compounding its revenue like crazy. So here we are at Seeking Alpha. We can just take a look at how fast this revenue has grown. Okay. So back during the pandemic, they were at 144 million. Now moving forward, this company is projected to do $500 million in revenue, and in 2024 fiscal year. Now remember, now this is the fiscal 2022. This is the year that just ended for Chargepoint. Projected fiscal 2023 revenue, that's over the next year, for almost $500 million, and just in fiscal year 2024, which will be ending in just a year or so, almost $1 billion in revenue. So this company is projected to basically double their revenue every year. And the simple reason is that basically they're moving in lockstep with EV growth. So this literally is, if you guys are looking like for an index fund or some type of very passive EV play, I think Chargepoint by far is the best pick out there. It's the biggest publicly traded EV charging stock, and it has the biggest market cap. And it just checks off all the boxes. Okay, the market cap is just $4 billion. So why do I think this company can 300? I have a $3,000 price target on Chargepoint simply because I believe the electrification of vehicles won't stop. This company will be able to, I believe, grow its revenue between 80 to 100% year over year throughout the rest of the decade. So to kind of give you guys a visualization of how this will work, all we're going to do is pop in some of the revenue numbers, and then I'm going to show you guys my calculation on how I came to $3,000 a share. Okay, so for this projection, I'm going to be using a tool called a reverse compound annual growth calculator. That just allows me to kind of figure out what the revenue growth will be if this company were able to grow at 100%. Because remember, EV adoption is very low. Okay, just 1% of the vehicles on the road are EVs. And that number is probably going to be doubling year over year over year as more, it's like as more and more people get an EV vehicle. This thing really is going to start taking off this decade. So if we take a look here over the next 8 years, Chargepoint could hit around $60 billion in revenue by the end of the decade. Okay, so this is over the next 8 years. Obviously, this is just a projection. Okay, I'm not 100% sure. And this is not financial advice, but I expect this company to be crushing it, okay? Everyone's going to know Chargepoint. It's going to basically replace all of these states like Exxon and BP and all these things. Chargepoint is going to be the de facto station for people with an EV. So $61 billion in annual revenue. Now, currently, the company is trading at a price-to-sales ratio of 13. So it's valued at around 13 times its revenue. Okay, they're trading at a $3 billion market cap. So we do some quick math here. We head over to Google Calculator. This company is doing 61 billion. Okay, so a lot of zeros here. So if it's doing 61 billion in revenue, so we can just do this quickly in times of 13. 13, price to sales ratio of 13. Okay, so that says that this company could be potentially worth $793 billion market cap. Okay, we're approaching $1 trillion market cap simply because this is the biggest company in EV charging. EV charging will not go anywhere. This shift is for real. So now we divide this by the current market cap of around 3. Then that means we have a potential 264 times increase in the stock price. The stock price could go up as much as 264 times. So if we do 264 times its current stock price of 12, that's around $3,000 per share, guys, assuming there's no dilution or any reverse splits, stock splits, any of stuff like that. So that's my thesis, guys. That's how I see this company. You know, to give you guys a quick review of what we talked about, Chargepoint is the biggest EV charging company in North America. Usually the biggest companies, whereas Amazon, Apple, usually these companies approach $1 trillion in market cap, exceed $1 trillion in market cap. I believe Chargepoint is this company. It's got everything. It's been around a long time. The CEO is fantastic. He even does a nice letter to shareholders. It just really checks off all the boxes. So I'm long Chargepoint. I hope you guys enjoyed this video, kind of the way I'm thinking about this company. If you guys have any questions or comments, be sure to leave them in the comment section below. I'll do my best to answer them. So right now, I think this company's a strong buy. Wow, I'm going to be loading up on Chargepoint as well, trying to get as many shares of this company as possible. It's like a pure play on EV. Doesn't matter what Tesla or Lucid or whoever sells vehicles. I think this company is going to crush it. So if you guys enjoyed this video, if you guys want to know exactly which stocks I'm buying and selling and when, also my cryptocurrency trades, be sure to check out the link in the description below to subscribe to my Patreon account. If you guys enjoy this channel, please smash the subscribe button. We're going to have to do a lot of new stock analysis videos because a lot of those videos I made in the past, a lot of the things have changed in the company, so it's time to update that content. So that's it until next time, guys. Hope you enjoyed this video. Take care.